So we'll be discussing like practical steps, how to start trading, how to trade. What we're gonna skip from this class now will be how to open an account, how to fund it. I'm sure everyone is gonna I already know that one. Then I can also give you introduction to it, which may be a little bit different from the one you know. I'm sure all of you have also read about it. You know what it's all about. But my own introduction will help to define our strategy. Because if you hear about Forex or online trading or whatever, you always hear maybe foreign exchange trading, buying and selling of currency. That's what you will hear. Now, I will also now show you guys how to buy and how to sell, relationship between margin, leverage, and how to manage them properly. Then how to set up SL, take profit, and how to manage risk. The other most important topic we will discuss is market analysis, how to analyze market, so that you can be able to spot out opportunities by yourself. Yeah. So that's one of the most important. And these things now are the things that a lot of people who registered new are telling me that they are lost. So sometimes they don't just know what to do. When they open their platform, they don't know what to do. You know, they just close it. So when we send analysis, they don't know what it is all about. Yeah. So that is why I want to like treat it properly, get it recorded. So even though those that are not here, because we're supposed to be, I think, either 11 in number, can be able to watch it again. I hope you all can see my screen. We can also extend to other markets like ETF and stuff like that. You all can see my screen. If you're not talking to me, I will assume that I'm talking to myself.
Okay, we can see.
So one person supposed to be at least in a very quiet area facing his laptop where I'm facing my own laptop here and be seeing the same screen I'm seeing fully on his own, where he probably lock his door and let people know that he's in a session. That's how you can pay attention and understand these things. Yeah. But if you are on phone, you're in a car doing something, you say you're learning Forex, you're gonna waste all your time and you're not gonna learn anything. Mm. So now, before I forget, you see this market here. So this is one of the advantage or one of the strategy you will learn as an advanced trader. If you see this market has gone to this point, that trading give you more profit when you give it time. You see where this market has gotten to. Remember that we place a buy. I think we exit very far because we always watch it. Assuming we are not watching it and place this buy and continue doing our regular work, leave it. How many days? 1, 2, 3, 4. Within 4 days, now look at where the market is. Yeah. So by now that buy could have. Well, I think I know that one of those buy. Well, I know somebody that started that earned $300 from that buy, from that small buy. So imagine if you continue. That was on Sunday, previous week, and she get it on Monday morning or Tuesday, Monday afternoon. Imagine if we had that buy. But now she must have been talking about 800 or $1,000 profit, because keeping a trade for a long time helps a trade to make more money. So let me go back to what we're discussing. So we're gonna discuss about introduction to the market itself. My own introduction is that starting from currency trade, which is popularly called forex, it is buying and selling of weak and strong currencies. That's how we defined it. Buying and selling of weaker and stronger currencies. Because that strategy is what you need. That definition is what we need to define our strategies. So when it comes to FS now, you see Euro USD, Britain Pound USD, and JPP, JPO, USD, JPY. You see that chart goes up and down, up and down. What makes them to go down is when one currency is weak and when another currency is strong. So as a trader, the first strategy you will learn is to try to know what could make a currency to go weak and what will make a currency to go strong. That is the first thing you will learn. If you're able to understand it, you're already like 10 steps ahead of becoming an advanced trader. Once you're able to understand what could make the currency to go weak and what could make a currency to go strong, boom, you have gotten it. For example, now what you see now happening here is that dollar is fading off. Dollar is fading. Dollar is seriously fading. Meaning that dollar is very weak. That's why euro have taken over. In fact, all the area we put our SL, it has hit our SL, so no problem. Because our SL was here, the market has hit. Fine, because volatility is so strong. So between Monday and now, the market has done from here to this point, it has done 476 pips. Yeah, we thought that maybe at this particular resistance, because here was a resistance, that the market will like obey it and kind of come back. But it has broken all the necessary resistance available here. Of course, it has broken this one for a long time. Yeah. Now, why is like that? Because of euro become strong and dollar become weak. So the market has to go green. And these candlesticks, of course, you guys should know about candlesticks, bullish and bearish. Like the bullish one is green candle, bearish one is the the red candle, and it's a sign of sell, while the green one is a sign of buy. Yeah. Now, as dollar is weak, it affected every other one, even in Britain pound USD, well, it's also weak. Gold is not the same thing. It's a commodity, and USD JPY dollar is also weak because the dollar is weak on generally in the stock market. The US economy is weak, so that means dollar become weak. So now, in other words, from my definition, when I say forex, our currency trade is buying and selling weaker and stronger currency. In other words, and I told you that you should find out what could make a currency to go weak, what could make it to go strong. Once you're able to know it, you will know the position to take. So for this thing not to happen, it means the US economy this time is weak and it affected their currency because all the currencies we are trading here are connected to the country's economies. The economic power of those countries are tied to their money because they run free floating economy. So when the economy is weak, their currency goes weak. When the economy is strong, their currency goes strong. So what you will do as a trader, take note of this now. What you should do as a trader is this. You could make a research, for example, what are the factors that strengthened United States economy? These days, you can even use AI to get them. What are the factors that could make United States economy to be strong? Do you understand? Then that is, for example, you are trading United States pairs. Then, assuming you are trading euro and the United States dollar, you can also say what are the factors that could make euro to go strong or weak. Oh, okay. What are the factors that will makes the European economy to be strong? You see those factors. You see both the interest rate, the GDP, the trade balance, all the whole thing. Then you analyze it and summarize it. At the end of the day, two of them cannot be strong at the same time. Lie. You may discover that euro is actually very strong than dollar based on the economic factors that you see, but the unemployment and whatever. This is, I have to summarize it because of economic overview is the best way of knowing the nation's strength, and that nation's strength will tie to the economy. Then at the same time, if euro is weak, you will see from the economy and from the economy. Then if it's not, you also see it there. Then because of that, now you could come into the forex market and choose a position because you have discovered, for example, maybe the euro is gonna go weak and dollar is gonna go strong. Then on this note, you have to sell here instead of buying. You have to come to a platform like this and place a sell instead of buying. Somebody may ask, why will I place a sell? It's because of this currency pair you see here. Let me circulate. This currency pair you see here now. You can see how they organize Euro USD. We're here now, USD JPY. So because of that, Euro is called the base, or yeah, the major currency that is driven that is responsible for the green candles. When the market goes up, it means euro is kind of strengthened. But when the market is coming down, when the market come down like this, come down again, it means euro will be going weak and dollar will be going strong. So a situation you will discover that European economy is strong. That means their price of their currency pair will go more up than dollar. However, be developing a strategy, please write this one down. Developing a strategy because you are trading two strong currencies. After euro has gone strong, it does not stay there forever. It has chances of coming down because of dollar will finally find its way to also retaliate. What we're gonna do as market has gone up so high, it will now create opportunity for people that want to sell dollar, like place a sell on the market here. And then, but in the reality, what it actually means is that they are buying dollar because dollar has gone weak. They will buy it more to make money. So, and when they buy the dollar, or when they keep buying the dollar, the strength of the dollar will keep rising. However, not just because of buying that dollar, the economy is already going to recover. Maybe the stock market, their stock market, whatever thing that is tied to US dollar will start like recovering, and the strength of the United States dollar will start building up because people will start investing more. Because all these countries, their economic activity is connected to their stock exchange. So investment flows in and out through their market, and people are buying them and selling them. And before you know what's happening, dollar will start gaining strength again. Then the market will start coming down. Now, what I'm saying is this: because when we see that one particular currency is strong, remember it does not stay strong forever. When it has gotten to some certain height, it will always go weak. Then the other one may find way to bounce back. And when that one is bouncing back, it has created opportunity for a seller on CFD. Do you understand why in the in the actual sense, investors are investing in that economy and it's going well, and the market of United States dollar will fall. Let me know if this explanation is very clear because if I have to be sure this one entered very well. This explanation, did it actually enter or kind of stayed halfway? It's like it did not enter at all, or you guys are sleeping. Or is it my mic? No, it's not my mic. You're allowed to unmute yourself and talk. You're allowed. Or you drop a message. Think I should need coffee. I think Felix tried to talk, but I can't hear him. I'm not sure it's me because my speaker is so much connected. I heard someone before. Okay, I can't hear anyone. I will assume that you people are following. So let me continue. Okay. So, in other words, take note that currency trading by us is defined as buying and selling a stronger and a weaker currency. And what you need to do is to try to know which currency is strong at a particular season and which currency is weak. Why it's important is that it will help you to know the position to take for a long time. The way I give you this instance, assuming where we hold that buy for a long time, now look at euro keep getting strong to this point, almost a week plus. Because of that, you see that a currency can go strong for a long time. All this idea of day trader is like gambling. Yeah, all this is like how they wired our mind to think how we can be able to generate more volume because they just want you to make sure that you keep trading every day. Now look at what I mean. You see how many days that this market went off from here, even as it came down, but the market still go up, go up, go up, like to this point. Check how many days. This was October. last year. Check this day. This was December last year. I mean, from here, if you trace it down here. So you see how many months now that this market keep going up. So I assuming somebody place a buy here. I assuming someone place a buy here, then or even if you place a buy here and leave it, look at how many days that buy keep going to this point before now. Even though maybe the market also came down, like here, the market came down, but let's say a buy is here. Now look at where the market is today. You see where the market is finally. You see how the market has been moving, also come down, but moving, go up. That's in position. So you could see now that euro is dominating the market. Yeah, yeah, and it's a sign that European economy is getting stronger than the United States economy. It's as simple as that. Because the strength of of their currency, or the strength of the economy is tied to their currency. This is forex trading for us. This is how we defined it. Then we now have commodities. I have also listed some of them here, like oil and gold. We use it as a case study. So commodities and gold, you see it here. Gold is just a commodity, and is one of the instruments we use only for hedging. The factor that determines gold and oil is demand and supply. Then the factor that determines oil is demand and supply, politics, and natural disaster. These are the three major factors that determines oil. Most commodities are driven by demand and supply. They are not driven by the economic structure of United States of any country. No. Demand and supply. Look at what is happening in Iran. Now that is where the oil market is going. But the Iran economy is so poor, so then their currency is zero because of everything is flat. But what is happening with them is not causing global oil price to rise. Even though Iran is not trading on Iran is on sanction. I'm not sure the oil is traded on the international market. So just imagine. So it means the economy of Iran is not even tied to the oil, but our economy of the United States is not tied. But commodities like a global asset, it does not being it's not like driven, the power of is rising and fall is not driven by economic structure of a particular country. Is there are many factors that affect it, which is that demand and supply. Why is demand and supply, or why is Iran affecting oil now? Because within that Iran sea, those Middle East Sea area, the trade route, a lot of flow through there, and when there's a tension within the Middle East, many oil vessels will be scared to move within those areas, and the price will start rising. Yeah, another tensions. So you see, another thing that may affect it. So when we want to trade on commodities, we consider demand and supply metrics. What are the level of demand we have? What are the level of supply? And other psychologies or other politics that is being played around the commodity market. You just have to know it. And the ways we can trade on commodity market, we can trade on commodity market. Please take note, as a CFD, which is the platform I'm showing you in a CFD platform. It's a CFD platform. You could see it here. Yeah, CFD. This platform now is a CFD platform. It's a CFD. That's contract for difference platform. And you can trade it as ETF. It can be cash ETF or futures ETF. Cash ETF. Then you can trade it as a future. You can trade it as an option. You can trade it as a swap. But this one now is CFD. The difference is that CFD is a little bit high risk than ETF, but they all have their own risk. What makes CFD more risk is that CFD has to do with leverage, and they can use the high leverage, which will make you more money or make you lose more money. Yeah, and it's also done on margin, but it's one of the biggest markets so far. A lot of investors play a role in it because of CFD can give you more profit. Like this, look at how this one now has done 96%. So this is like general changeover. But if you convert this to CFD, it will be big. Okay, sorry. This is like sentiment, buyer sentiment. So these are the change in price. Sorry. So now, if you convert this now to CFD, now it would be like a very big, but in the normal sense, in the stock market of this palladium, it has done only 2%. But CFD can magnify this 2%, it become bigger based on the use of leverage and, of course, margin. Now, exactly. So on a Q note, commodity trading is driven by supply and demand, and others geopolitical tension or political reasons, especially when it has to do with oil. So as a trader, what we'll consider is this: what are the things are we going to look out for? How do we know when there is high demand, and how do we know when there is high supply? How do you know when there's less demand, and how do you know when there's less supply? These are the factors we ought to look into, and how to define commodity. Any question on this one? So I've been able to give you introduction to FS and commodity, like overview, how it works, and different markets it can work. It can play on them. It can play on them on a spot exchange, ETF, derivative, and CFD, which is CFD is the current platform I'm sharing with you. Any questions so far? I'm a coffee guy. I think I need coffee. So drop your question. Let me just take my coffee cup and take a coffee. I was expecting this class to be very, very interactive. Uh, you people say you want to learn some things, and you're not even responding to me like that. But if you just market analysis now, or weekly review, all of you be talking. Please let me just take a coffee. I'm coming. Just like 1 minute. The everything is here. Let me just make a cup of coffee for myself. I like taking coffee. Then, if you're in a very busy place, you could type your message. Then I will read it. Yeah. How many of you like coffee? Okay. Somebody said, how do we know when to buy or sell commodity and forex? And what do we look out for before we place a trade? Yeah, that is what we're gonna discuss as I progress because of I'll just give you an overview introduction on our own. So we're gonna look out at one of the things we look out for at the end is analysis, how to analyze market and spot opportunities. Then, how do we know when to buy and sell? How do yeah, so it's all the same thing. So I don't want to jump it because many people say they are lost. So I have to make sure I give you like overview introduction so that stage by stage you're able to no one will be lost so that stage by stage no one will be lost. But I'm sure that you guys got the concept of my own definition of forex and commodity trading and the places you can trade on them, like, and I mean the natures of trading you can do with them: spot, futures, derivative, CFD, ETF, and swap, and all of that. They are all financial instruments with different model of trading. Yeah, I was expecting people to be asking me what are the differences, even though I may not, even though you people are not don't want to trade on them, but you also need to know them. Yeah. So since nobody's talking to me, let me put this thing on my neck. Now we are now going to talk about margin because we are skipping some things. Some of you already know about balance. You already know about platform, all this uh, all this chat, can you stick and everything. I'm sure you all know those ones. So we are going to discuss about equity, margin, and free margin. So now and from there we will enter into the risk management aspect. So the risk management aspect, we will discuss about lot size to select when opening a trade, like lot size or volume when opening a trade. Then from there we'll now come into how to spot opportunities in the market. So now we have what we call margin, free margin and equity in the market. I don't know if I have a small account I can use to show you that thread. Maybe I will ask for permission to share them. Yeah. Now, but for here, for example, here, um let's use this platform we am sharing with you now. This is a demo platform. There's no live thread here, but everything you see here is almost like the same thing we're gonna see on live. I will ask if I can show you a live account so that you see how they are being interactive, but they are all the same anyway. So, for example, now this is Euro USD, and this is the balance on this account. On MT5, you see it as normal balance. You won't see it as my trade value. Because this platform now is like multi-asset investment. It's not like Forest MT5. As you can see, there's a stock here, there's ETF here. So you could do some cash. You could do some other things here. They may not necessarily be highly leveraged. Mm. So now you see free fund. So this free fund is what we see as free margin. Another name for margin is fund. Yeah. So free fund. So when we want to place a trade here, we don't. The market structure does not necessarily allow us to use all our money to place a trade. We're gonna use a portion of it. That portion of that trade is called margin, and that portion is going to be selected from the lot size that we select. The lot size that we select will determine the type of margin the broker will give. Now take note, you cannot choose your margin. Brokers give the margin. In fact, I can even tell you that from the way the market is structured, it's even liquidity providers are the one that are providing some of these margins. It's not even broker. Yeah, for example, something like spread is provided by liquidity provider. It's only a broker that give what you call markup. So now, let's say I want to place a trade now. This is 130,000 account, and I choose one lot. This one lot now is 1.0, for example. It will determine the margin they will give to me. For example, now let's say I place a buy or on euro US. For example, the buy have been placed here. You see that the margin taken from my account to open this trade now is $239. That's what they took for me to be allowed to use one lot to open a trade. So now I still have free fund, which is free margin left, which is about $130,000. Yeah, and this my margin in percentage. But now here now is the trade. You see the trade is not, it's just counting at $4, $5, $9, $10. But because I just place it now and I place a buy, and this is the margin taken. So the more I place more trade, the more margin is leaving my account. The more I place more trade, the more margin is taken and be adding here, and the more my free margin will be reducing. However, when I'm making more profit, my free margin will be adding. Once I'm making more profit, my free margin will be adding, my equity will also be adding, and my balance can be constant because I've not closed the trade. But my margin is always constant as well. My margin is also constant. Because margin is the security that was taken, that is holding that trade. Do you understand? Sir, the margin is the margin level is percentage measure. Or the margin level is like percentage of margin. That's 54,000 percentage you have. So, but we don't really necessarily pay attention to it. We pay attention to more of free margin and margin. I will also pay attention on equity. It is from this free margin that people lose their money. And they also, yeah, people get more. The more trades you place, the more margin is taken, and the more your free margin reduce. So there may be some point when you don't have any margin, which is any free margin. Even if you place a trade, the trade will not go. If you like have $1,000, $1 million account here, if your free margin is zero, you don't have any money. Yes. That's why it's called margin. If you check some forex brokerage warning, they will tell you forex trading on margin. They always mention margin and leverage. Yeah, it's not necessarily a balance. Let me say it again. If you like have like $1 million account, if you don't have any margin, you don't have money. And they can only occur if you have traded. So what is available, what is seen as free margin or free fund is the real money you have, not the balance here. So this is very important to you because it will help you to know what loss side to choose, what some things to observe. Sometimes we lose money because of not observing those things. It's not that market is that risk. I don't know if I'm making sense or if I should be faster. If you guys know all these things, because I wanted to know the level of your understanding so that I know the kind of frequency I will use. Is the platform is it the platform provider that is it the platform that provide? Yeah, it's the platform that is the broker that give the margin, not you. You can't choose your margin, but you can choose your leverage when opening an account. Margin is given by provider, by platform, but influenced by liquidity provider. So it's not something that a trader negotiate. A broker decide that. I like this can answer me the question. So it makes me to feel that somebody's listening to me. That's Akinyemi. Yeah. So if you want to be an advanced person, it's all these minor things that you observe more. Why beginner don't you know observe all of them? Those little things makes you much better trader than others. Yeah, it's like when you do a master degree, you see that it's the same courses they give you in first degree. It's also the same course they are giving you a master. If you do a PhD, they also similar courses, but you are going deeper into the same thing. So some of the things that they skip for you on your first degree, you pay more attention to it on your masters. Some of the things they skip for you on your masters. Uh, for your PhD, you cannot skip They cannot allow you to skip it. You have to pay attention to your PhD. Yeah, the same thing, the same market. Because of some minor things that we overlook, we become beginner and amateur traders. While other people pay attention to those minor things. So imagine a lot of traders don't even understand how it correlates to their account. Yeah. So now, for example, let me place a trade now with 100. I don't know whether they will allow me to place a trade with 100. So I'm placing another trade now. That's with your 100 volume. And they check my margin now. Let me circulate because I've been more practical. So check my margin. It is 239. So I want to place another buy. You will see that my margin will be added. Some money will be taken now. Also check my free margin. I hope I will be able to finish this in before my time. Because I'm so you also check my free margin now. So my free margin is 130. So check now, there's gonna be a change, a shift immediately I place this buy. I'm buying again now. Buy. Oh, it has entered. So what did you see? Have you seen that my free margin something shifted? It has reduced. My margin something added. More money has been taken from me and add I see. So that's why I told you. Then have you seen my trade value? The value of my trade something shifted as well. But on MT5, balance is constant. On MT5, if you have the MT5, you check it, see that your balance is constant. So this is like equity on MT5 now. Yeah. On MT5, we give you balance constant, margin, and free margin. Like I said, if you like have $1 million, if your free margin is the real money you have, free margin means the free fund, a fund available for you. That's the real money that you have is your free margin. Is that one clear? Now, uh, the more losses I encounter here, the more losses I encounter here, the more my free margin keep reducing because it's not constant. But my margin has already been taken. $24,000 has been taken to open this trade. And look at the positions. Look at them. Yeah. It has been taken to open. So the more I gain, the more my free margin returns. Like the more I have more free margin. As you can see now, I'm having 105,000 instead of 104,000 because of this trade is now minus 800. So the more I gain it now, the more my margin keep adding because of more money is becoming available. But the more I keep losing, the more my margin keep going down. My margin can go down to 50% or 80%. Then I will receive what is called a margin call. Broker will ask you how. Please add more money to your account. Look at it now. It's now 106,000. I don't have a margin. So because you don't know about it, when you stop, you say like broker is a scam. That broker scam me. I woke up, I didn't see anything. And not because of these things. So which one be margin again? I just deposited. They say I should deposit again. I don't understand that email. Not because of all these things. So as a trader, it is our ability to control those things to avoid making it excess. And what makes it excess is because of leverage we choose in placing our position. Leverage we choose and the volume we choose. Leverage first and the volume because when we choose a high leverage, we can be able to place a trade with a high volume. And that high volume will give us high profit or high losses. Yes. When I started trading before, we used to manage our margin properly and we can be able to add fund when we are having a losing trade to maintain our margin and equity. Now traders doesn't even understand those things again because probably the way they were taught trading, nobody pay attention to them. So everything has become a scam to them because they don't even understand much. Now, have you seen that I've gained $1,000 now, but my margin is still constant because it's a holding deposit, holding money. Then my value have added 1 to 32,000, but my free margin has also added 106,000. But my margin level has gone down. Like before it was more, but because of this volume I have used, this volume is big volume. It's a very big volume. It's like 100 volume, mean that probably $100 per movement. So it's a big volume, and that is why I don't have the strong margin level, but I still have enough money. I can place on that trade. That is relationship between margin, equity, um, free margin, and leverage. Let me know if that one entered very well. Whether you have a question. Did it enter very well? Is equity also no equity is your balance on trade. The balance you have that is trading. What is your balance on trade is equity. Your rebalance is not your rebalance if you have open trade. So any profit you are making will be reflecting on equity instead of balance. That's what we call it balance on trade. Any loss you are making will be showing on your equity instead of balance. Let me know if there could be an account I will show you. Okay, this one, yeah, this is like equity now. As you can see, it has dropped to 132, 130,000 instead of 132. So any loss you are making will be reflecting on your balance. Any profit you are making will also sorry, any loss you are making will be reflecting on your equity. Any profit you are making will be showing on your equity until you close the trade. Take note, until that trade is closed. That is when all of them will return back to your balance. And your margin will be returned back to you. Your free margin will be the same thing with your equity and balance. So if you have money, if you have a trade that's going on, you want to make withdrawal, you want to make this, don't pay attention to your margin, sorry, your balance. Pay attention to your free margin and pay attention to your equity. That is the real money that you have in trading. Some of you may say, I want to withdraw. This broker keep canceling me. I know, I don't understand it again. Which time you say I don't get money? Now because you didn't really pay attention to some of the parameters used in trading. It's very important. This one, none of you is talking. Are you sure you're not with women? You guys are not with different women in your respective places. And yeah, that's why not like you don't want to talk. And I'm just like talking to myself. Because the Zoom meeting can be fun. The guy may be somewhere now with his babe or his wife, anyone, watching TV cross leg. And I'm talking, they are listening. They don't want to talk.
May I have a question?
Okay, so I can hear you now.
Okay, so margin is determined by my leverage, by my lot size and leverage.
Yeah.
Okay. So if I have $1,000, $10,000 account on oil and I place 0.02, so that would determine my margin. So the margin plus free margin, is it equals to my balance?
Yeah, the margin, yeah, perfect. You got it correctly. The margin and free margin is equal to your equity.
Okay.
Not your balance. Balance is constant.
Okay.
The margin and free margin is equal to your equity.
Okay. All right. So anytime I place a trade, my equity will be reduced by my margin.
Yeah, anytime you place a trade, your free margin will be reduced because margin was taken.
Okay.
Yeah. So yeah, your equity will become like a second balance that is not static, because when you're making profit, it will be showing on equity, and it will also be adding to your free margin. When you're also making loss, it will also be showing on your equity. Why the balance is always constant. That's on MT5. Like this platform doesn't show balance. It shows you the value of your investment, because this platform is a multi-access platform.
All right, thank you.
Okay. Now, let's go back to lot size. How to place a trade. Somebody asked me that question that I don't know whether she's not even here. That she don't even know how to place a trade at all. Yeah. So now, placing a trade also is important if you're a beginner, because the value of the lot size you select can determine how your profit will run. Is also part of the risk management. how to place a trade. For example, if you use 0.01, let me type it. You can write it down. So, kind of in Forex, one lot, like in Forex, one lot is equals to $1. Yeah, and 0.01 is equals to uh, 1 cent. That's 1 cent. Do you understand? Then 10 lot, 10 lot in Forex is equal to, when I say Forex, I'm talking about currencies, is kind of equal to $10. When I say Forex, I'm talking about currencies. You see them? It's equal to $10. So now, what this means is that let's say you have a $1,000 account, and you select here is the lot size, one lot size, and place a trade on Euro USD. Each movement will be giving you $1, either profit or loss. But if you use 0.01, play the same trade, each movement will give you 1 cent, either profit or loss. So if you use one lot and place the same trade, each movement, let's say 10 lot, and place the same trade, each movement will give you $10. However, you may not be able to use $10 to place trade on $1,000 account unless if the leverage is high. Like that, my friend, I asked question now. Say if he has $10,000 and he uses 0.02 to place a trade, 0.02 will give you about $200 margin. Yeah, meaning that your free margin will become 9,800. But if he sells 0.2, the broker may give you about maybe $400 margin or 600. But if you use one, the broker may take $1,000 to open that trade for you. If you use two, like you know what I mean. So the bigger the volume, or the bigger the lot size, the bigger the amount of margin that is required to place that trade. Some of the platform can show you the margin you need. Let me know. This platform doesn't. Yeah, this platform now shows me margin. For example, let's say I want to place trade with 10 lot. You see now, it's showing me that what I will need to open this trade is $2,395. I don't know whether you're seeing what I'm saying. That's what I will use to open this trade. That's on one volume. But assuming I'm placing a trade with $1,000, so what I will need is $1,239 margin. So now that's almost like more than 20% of my balance. So if I have it, I may think that this is risky for me. I'm not gonna use it because of I'm using more than 20% of my capital to trade. I can say, okay, let me use 0.50. So if I use 0.50, it means I'm gonna trade with $119 margin. That's margin requirement for me to open the trade. I don't know if I'm making sense. On MT5, you may not see it this way, but you have to take note of all this. They are all similar. The MT5 may not give you those type of all this breakdown. Yeah. So what is the advantage of this of the margin? CFD is not CFD is a market type. It has no advantage. It has this question does not correlate at all. What is the advantage of CFD compared to magic? So CFD is a market type, and the nature of CFD is that you have to trade on margin, and of course with leverage. What is the advantage of the margin compared to CFD? So and the advantage. Okay, I work. Let me go more deeper. I try to understand your question now. So the advantage of margin on CFD is that it will enable you trade on small value. Small value. Can you teach how to use? They're all the same. This is Web Trader now. Yeah, I'm using Web Trader. It's not MT5. So it, once you open it, it will show something like this. All of them. So the value, the the margin on CFD, or the advantage is that CFD allow you to place trade on a small unit, and like less unit. You know what I mean? Why, if it's ETF, you may not be able to use that kind of unit to place trade. You may use the raw cash to place that trade, but CFD you can use less. In fact, even 0.01, like the least 0.01 can place trade. So because of things is done on margin, like 183.936, this is like a marginal form. So each movement could be seen and calculated, and those movement can be amplified using leverage and lot size to give you more profit. So that's why it's called margin. So it will be counting us on a small margin and accumulate, and each of these unit of margin will be giving you profit. Is counted as market value. And that's also why the advantage is that some of you will come and put $10 into trading and it will execute trade, put $50. But the real market, you may not be able to put that kind of amount of money and trade. In fact, if you put it, you have to use the whole $10 to trade. But if you put $10 into some broker's account, even $50, you may also discover that you're not using the whole $50 to trade. You still use 0.01, which will be maybe $5 to trade, while you still have $45 remaining as a free margin. And that's an the advantage. So it could be just small. You may trade this week, you gain only $10 or $2, or even if you have a loss, you may lose only $5, but you still have 45 because your trade is done on margin. So it's a little version, little fraction of it, and that's what it's called, mostly called CFD. And that's not the only reason why it's also called CFD. The only another reason why it's called CFD is that you're not trading the euro and JPY currency directly, like owning it directly. So kind of even this position, it doesn't own it. What you own is the value of the movement, which can be settled in cash. It's not that they're gonna send you euro if you gain, or they're gonna send you Japanese yen if you gain. And that's why it's called CFD. So you don't own their underlying asset, but you can trade on it and make money from the value movement. I hope that one entered. So I think I've already entered into the risk part of it, because so this will help you to manage your risk. For example, now let's say some of you now that have let's say you want to use one lot to place trade. Look at, okay, I've already talked about it before. Now let me go to oil on the same thing. Now let's say I come to oil, that's commodities. I know that some of you trade oil with us. Origin has done 240 pips today. So powerful. So now let's Origin. Now this is 10 lot. Look at what they're giving me. $9,000 to margin will be required to open this trade. So if I have $10,000, I can't even open the trade in the first place, because it will not go with 10 lot. So now with one lot on here, they're telling me I will need approximately around $934 to open this trade with one lot. That means if I have $1,000, I should not even try to use one lot to trade. So now let's say 0.02, like my friend said, ask. So 0.02, okay, they give me only 18 cents. So $18 to open the trade. Yeah, means that if I have $100, I can even trade it. Yeah, it's about $18. And if I have $200, I can also trade with 0.02. And this is relatively with many brokers. However, MT5 may not break it down like this. That's some of the limitation we have on Metaport. They're not breaking down things for traders. I don't know the reason why they develop their app like that, because some of these things may even be avoided, especially on the high market volatility. A trader will not know the exact value they're giving him until trade is placed. That's how MT5 is built, unfortunately. But it's the most popular one. So if anybody asking you for MT5, so sometimes we will use those other platforms that give more details to make analysis, so that we can understand properly how this is done. So let's say
Sir,
now you're using
sir,
0.10. So I'm coming. 0.10. You see that 0.10 is telling you that you need about $93 to open the trade. So for example, if I have a $1,000 account, I can use 0.10, but it's actually 10% margin. So that means if I have two positions like this, on oil, and that means I'm using 200 and something dollars margin to place, which is about 20%. Now I can consider myself taking high risk for my trading, because each of this movement will start counting based on the margin I use, and I'll be making $2 per price movement. Yeah, ask a question.
Okay. Um, I'm getting this. And I want to know, okay, so if I open with 0.2, for example, $186 will be removed from my equity,
Balance.
from my balance to open
Uh,
the trade.
yeah, it will remove from your balance and remove from your free margin.
Okay. So, but is this determined by where I want to stop, the stop loss?
Yeah, no, you cannot determine it by yourself. For example, now, since I'm trading with $24,000 now, I may put my stop loss where I will not exceed 24,000. That's if I want. I mean, also put my stop loss only on $1,000 limit, even though I have $24,000 margin holding it. So stop loss is not something that it's not a must. You could choose your stop loss at anything. You could choose 10%.
Okay. So the margin is if I don't have up to 186, I will not be able to open the trade.
Yes, it will show you not enough fund.
Okay.
If you don't have up to 186 free margin, they will tell you not enough fund. And
So
okay, go ahead.
so my question now would be, if I want my stop loss to be $100, irrespective of the margin, it will cut it off when it gets there.
Yeah, perfect. Yeah. So some platform you could put your stop loss. Let's say now the market is 63, 62.30, and so if I put my stop loss 61, 61, but I have to put it on negative. Negative, I think. Negative. Yeah, you see, so if I put my stop loss 61.30, it has given me the estimated value, which is $210. So I can say, okay, 61 point maybe 70. So as you can see, it has given me 100. Okay, let's say 79. Let's say 85. Yeah. So 61.85, it has given me exactly $100 loss. Assuming we're doing the same thing now. So I can say, okay, this is what I'm gonna trade with. If I'm okay with this is my decision now, then I can buy. So if I'm buying at this market drop at this point, I will have as approximately $100 loss because of I'm using 0.02. So if I say, okay, I will break this volume down, I will use 0.1. But the same price of stop loss. Now my stop loss has reduced to $50. Do you know? Have you seen the correlation now?
Yes, I can see that.
So, but now the same price, I say no. I'm owning house rent. I want to gain this money quick. I put 0.3. My stop loss has also increased to 150 because of the value I'm going to use to trade is increased. And also, of course, you see that my margin must have also been increasing within. It's also been increased. Yeah, because of the volume you are using determines how your profit will be counting. It can also determine your loss. It's not even that you must follow here. For example, now we have gone $11,000 now. Our free value, which is our equity, is now 141,000. You see how it's adding, but our margin is still constant. But our free margin is 106. Exactly. So do you know that now that
Yes.
the margin needed on commodity is a bit higher than the margin needed on forex. That's why I talk about the lot sizes before, like this lot sizes here. For example, in oil, in commodities, in commodities like this, if you're trading commodities, um, one lot equals to $10. You see, why 10 lot equals to $100 movement. You You see it. So now, the same way you can standardize it, like maybe 0.01 can mean 10 cents instead of 1 cent. 0.2 mean $2 instead of 20 cents. So all this is have a way of impacting on your risk and how you select your trade. Has this one entered?
Yes.
Okay, perfect. So the second to the last one we treat is okay. I think you guys know how to close trade. Yeah, I think you all know how to close trade. So it's placing of thread. I think I've done it before. I don't know whether we should do it again. And that's what we did now to place this thread. So shall we do it again? How to place a thread and how to set stop loss. So now,
Yes.
let's say okay, shall we do it again and set a stop loss?
Yes.
Okay. So now, let's say now the market is going up. Somebody said, can you, what I mean, oh, sorry. What I mean to compare to FS on MT4, they're all the same. They're all the same. Making money from value movement. Yeah. Yes, sir. They're all the same. But what are you doing with MT4? I can't even remember the year I left MT4. MT4 is more than 6 or 7 years I left MT4. People are using MT5 and you're still stuck with MT4. If you're using a broker that is giving MT4, from that broker. They're not even near the market. It's obviously the book they're giving to you. Now, let me place a trade now on oil. Since oil is going up, I can come in here now, use one lot. That one lot, we're gonna have $94 this thing. So assuming I want to put a stop loss immediately, I can say, okay, since the market is going up and we are gonna buy, I want to put my stop loss 61, which will give me approximately $1,050 loss. Then I'll put my take profit. My take profit, I can put it when the market gets to 65. So which will give me $2,900. Then I place my buy. Boom, it has entered. Now look at it. It is this buy now. Now look at my stop loss. My stop loss is here. My take profit is here. But all these ones that was not take profit, I can still put the take profit now as I put them. Like this market is, which market is Euro USD. So if I double click here on any of them, here now, I can be able to put my stop loss and take profit as I want. Like now, I can put my stop loss maybe 1.7. Yeah, which will give me this value. Sorry, 1.7. Yeah, 1.7. Maybe I can even say 1.76. Yeah, to bring it instead of 1.79. Then I place it. Then I can double click here again. That's also the same way it is on MT5, because I know that some of you use MT5 a lot. So I can put my take profit now. After 1.9, after 19, I think it should be 20, right? That is 20. Yeah. So 20, maybe 9. Yeah, like 209. Then I will put this in. It will show me the value I will get and the total value in pips. Then I will apply it. Now look at it. My stop loss and my take profit has been added. That's on existing thread. Like I'm modifying the thread. Yeah. But so let's say a thread that is gaining, I can close it by just tapping on the thread. Like this one now that's gained 9,000, I can just tap on it, then it will close. So what is remaining is small thread. And the buy and this buy now is also, it's in my net profit. It's in my net profit. It's in my net profit here. How it is being done. So I'm having a lot of position as I speak to you now. I have a buy, and their value, their net value. Some of them has a stop loss, some of them doesn't have a stop loss. So these are the bases you're supposed to know as a trader. There are little things that you need to know, and they can help to control my risk and how I want to do it. So when we drop analysis, we expect you to already know what is suitable for it because I can't define it, your risk. You know your risk, what you want. Me, I can take any risk. I cannot take any risk depending on what that money is meant for. Like me, I only come to market to make money. I didn't come to market to save money. So some of you may want to save the money, you want to be this thing. So um um and you could now try to adjust your risk. Why me? I mean, also want to adjust my risk when you don't want to adjust your risk. It just depends. And that's why it's difficult to decide your risk. You can decide your risk using all these parameters. And all these things we call price is also what we call PIP. For example, let me say it again. Uh, for, for example, uh, when we put these things like this, maybe 61, sorry, maybe 61, it said that it has given us the number of pips. It will be about I think here about 40 pips. That's minus 40 pips, which is pip price interest point. Pips. Like sometimes people use more of pips. If you check our this, okay, no, he gave us 56 pips. So here is pip value 56 pips. So we can use pips because of that's some of the terminology people use in giving analysis, especially those people that give signals. Is that okay?
Yes, sir. It's okay. I noticed on Web Trader that I will need to place the trade first before I can. So once the trade has entered, then I will need to come and place the stop loss. It doesn't work with.
Yeah. I
Mm,
noticed as well. Some web trader can allow you place trade first before you place stop loss. Some allow like this thing I did now. I don't even do it. Like you see, placing trade before my places my stop loss together with my trade. I don't even like it. You see this thing now. I like to like place my trade first before my stop loss. I take profit because
okay.
what matters to me is the price. My interest, like now, I'm having loss on oil. I don't know why. My friend made me to delay my entry. This entry, I found this entry. That was yesterday. I find this entry 61. It let me for 2 hours to place the trade. So before I place that trade, then the market has dropped to this point. Yeah. So if I place all my trade here, so the market came down to this point. So I could have been on big profit now. So even if I didn't close it and the market go up, so my loss will be from here. My loss will be from here now to this point. Now I'm having a loss around here, 60. So I'm having about 200 and something pips loss. So what I'm looking for now is to get another opportunity because it has already gotten to this point. I'm praying that let it not hit 62, like this area will mark it. So once you get to this point now, I will find another opportunity to place another sell. That's countering my sell again, so that even if you drop half of it, then I'm no more considering profit. I will like recover, if not all, half of all like that or negative. Then I close all of them because this area will be the new area to place sell. It's no more here again. Now that's one of the reasons why I don't like to hold looking for stop loss, take whatever. I don't put take profit on my trade. I only put stop loss because it's only risk I'm against. I'm not against profit.
Mm.
Do you
Okay.
understand? Yeah, so price is more important to me, the price I enter. Because if I enter a good price, even if you put stop loss, it doesn't have any business with stop loss because the market will go your direction.
Okay.
The stop loss is only important when you're not sure that market is going your direction. I meet this point. At this point, I was just waiting at this point and it did not enter. I mean, my friend delayed me, then I now slept off for about an hour. When I woke up, I said, see, this price was my best price because I knew that this market most likely going to have a sharp drop. So price is more important. Because of those things, I don't like to delay my entry because of I'm setting stop loss. No, 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 no. I
Yeah.
like to hit my entry first.
Okay.
Later I can adjust.
So talking about entry and stop loss, if I place a trade and it has given me some profit. I heard about um, break even and partial profit before, but I seem not to get.
There's
Yeah.
nothing like partial profit as a general market terms.
Okay.
It's only given by brokers.
Okay.
Some brokers platform allow you to take some part of the profits. Just like when you're losing money, some allow you to close part of the loss. Let's
Okay.
say you're losing more money. The market. So instead of you to close everything at all, you can circle, you can close 50% of it. So it's designed by broker. Like this platform that doesn't have a partial profit. Yeah, it's them.
No.
They can so the programmer can program it. It's not like something you like the general practice in the market. No, it's based on the broker. Like,
Okay.
like the broker we are using have insurance. So if you place a trade, he can insure that trade. So it means if you lose money, if you lose that trade, they will pay you back the money. Why some broker doesn't have that insurance? No broker have insurance. The only broker I've seen that have insurance. Where you place a trade, you insure the trade. So if you lose the trade, they'll pay you back the money. Unless if your insurance expires. So these are like innovative system some brokers are bringing so that you see some reason why you should not use the broker, some reason why you should leave the broker. You know what I mean? It's like some of the things some brokers adding. Like I like the insurance part. If I see a very short trade, I take insurance and I place the trade. And I have double this thing. And then I will pray to not to lose it. Because even if I lose it, they're gonna pay me back only the short value. But if I gain, I will get more. But I'm already on a double protection. Am I making sense? How many minutes have we spent now? So we are on the last one. How to identify opportunities. Oh, this minute is not counting our minute. I thought it's counting our minute. Oh, it's not stream. Stream count our minute. Okay, but we started by we have spent 1 hour 39 minutes. Or 1 hour 35 because we didn't join on time. Mm. So now, how to identify a trade? I know that some of you are used to place trade, but you don't know. You don't know how to identify a trade. One of the ways to identify a trade is fundamental analysis. One, we couple it with technical analysis, but let me use technical because it's more pictorial in nature than fundamental is something you just read and imagine, try to apply it. For example, now, oil just quickly went up. I will share the link on our Telegram because of Iran and US discussing whatever. That was not the reason. That wasn't in plan. So that's fundamentals. So people that saw it on time, they are the one that placed the buy and the market started going up. We that placed the sell did not gain. That's fundamental. But another fundamental we used was supply ratio that happened last week, which made us to place a sell. That's fundamental. It's just all about ideal. But technically, there are other things we could consider in placing trade. For example, oil now has gotten to this height, which was the previous height, and this particular height now we could consider it as like a resistance point. It has gotten to this resistance like a point where you can resist. So one of the tools you can use to identify position technically is support and resistance. I know that you must have heard it before. It's a very vital tools, vital point you can use to identify potential entry. For example, how many of you saw this thread when we send it in the group about sell, like today? We put something in the group today about sell around here. They will put SL around here. Okay, somebody say yes, I saw it. Now, the reason why we place it was because the reason the person that asked me that question, I want to know when to place thread. I wonder. Okay, that's in Keshi. So the reason why we give you that instruction that cell was not because of any technical, any fundamental. It was technical. It was because of this market has gotten to this point where it came down before, where it came down heavily before in the past. Then, of course, has broken this point. Then now went up to this point, and there's a gap here. So as the market was on this point, now had this sharp drop, we are not taking this market is now on a resistance point. Try to know how to identify opportunity. So we use this resistance and say, oh, possibly that it may not break this resistance. So if you press a seller here, we put a stop loss here in case it breaks. No, there's no problem. But euro is not something. It's not like gold where you be pursuing it. It may wake up one day now, then the market has come down. Yeah, I'm like not just one day. Tomorrow, it may wake up tomorrow. The market has come down again. That's one thing about it. Yeah, because fundamental is not market reality. It's just market influence. It does not really picture the economic reality of that country. So after that effect has left, then the market will now come back and balance. For example, let me draw your attention. For example, in Kechi now, when we say that market balance is this kind of, you see this market now, the economic strength between Euro USD is here, it's like this. So this is the actual economic strength. From their chart behavior, you could see how the economic strength is performing. So kind of it means that the proper strength that matches their economic structure since last year is that um this is very common to understand, but is that the lowest price of this Euro USD is around 1.5 and the highest price is around 1.7. This is their normal market movement, and they picture the economic strength of the two economy. You see this one you see here that jump here. You see this one that jump here now. This fundamental kind of it does not picture the economic reality. Because from chart, you could see how something has performed. So those things, you see how this thing has been performing. Oh, that means it shows you the average range of their power struggle, the economic strength of them, what investors consider good, what they consider bad, or what they consider good opportunity and no negative opportunity. Because investors can weigh all these things, the rate which they will buy and which they will sell, and which is also the rate they are investing in that economy. So if you check the chart of anything, it will show you the range, it's been moving. Yeah, so that's one of the reasons why we said since it has broken and get to this point that it may come back, and whatever thing that's causing this market to move up now, anytime that influence left him or her or left the market will come back to its normal range, a normal economic power. For example, Nigerian economy was on fixed interest rate during Jonathan. No be so. And I think I thought that Jonathan was trying to remove from fixed and put it on floating. People were complaining because they were paying a lot of subsidy and everything. So they said that the sort of our economy does not mirror our currency. Our currency was almost like 200 and some 210 naira per dollar that time. I don't know if I'm communicating to anyone here anyway, but meeting is recorded anyway. So now Buhari entered and matched our economy to is it Buhari or Tinubu enter and match our currency to our economy. That's why the real reality of our currency straight now, boom, just showed us. So now, so the market just has to stretch to match the capacity of our economy. Because our currency now is now on free floating economy. The economy of our country now is what determines the strength of our currency. That's why our currency is very much wide. Because of that fixed interest rate was blocking us. We think everything was normal. While government was spending money to subsidize everything, making it like that. Some countries also run on fixed interest rate anyway. They know their reason why they are running it. But most advanced countries with their currencies doesn't run on fixed interest rate. They run on free floating, matching the economy with their currency, and the economy is tied to their stock market. That's also why they raise more millionaires than us, because most of the companies opening there are automatically, or the process of company opening in those countries is always going to the stock market. They have a lot of companies they just put on stock market. Even Italy, you just set up, or maybe kind of a restaurant now. Before you know what's happening, they will do the IPO and everything and put that restaurant into the stock market to raise more fund. One restaurant will just go global, have branches everywhere, and immediately they will sell. The millionaire has been raised. That's how those countries they raise more millionaires because their economy activities is matched together with their stock market. So stuff like that. So now, and that now also mirrored the strength of their currency. From their chart, you could see how it's been moving. So with this kind of structure, you can be able to picture out the potential area where you should buy and the potential area where you should sell. Now, another area you can another place where you can identify where to buy is also on support level. For example, if you check this market now, let me get you another market. I don't know if I'm making sense or if you guys are not listening to me. Yeah, for example, now if you check this market now, here is a support. Can you support to know? Here is a resistant. Here is a resistant. But here is a breakout. You see here, it's a breakout. Because of the market broke the resistant and breakout. Boom. So after this run, then it will come back definitely. So now, let's say this market come down to this point. Here too is like a support now. So this market come down here. If you come down to this support, you can say, "Oh, I can buy here because it's at a support." Support can use it. You can use support to identify opportunity. So if you open your trade, if you don't have any fundamental analysis to use, it can say, can I? You can ask yourself, is this on support or resistance? And this market is actually crashing. Dollar is madly moving up. Yeah, seriously. My mind is on dollar. I don't want oil to move like that because I have trade on dollar. Mm. So this market is actually moving back. See. See as it's moving. Like, see. I don't know what Donald Trump did to the world because the economy is becoming a mess. See, a day from here to here. You see why it's good to place trade and leave it for a long time. All this daily trade does not work. Imagine if I have left that trade since yesterday, since that last week now, I could have made mad money. But people will just be checking trade every day. They want you to be trading every day, every day, every day, every day, every day. For me, those things doesn't make sense because of that's the popular view they have given everybody. Just come on every day, every day, every day, every day, every day. You trade when there's good opportunity and allow you to trade. Okay, Trump is speaking. Oh, I see. So that Trump is speaking as opportunity. You see the opportunity as well. But fundamental does not take note. Fundamental does not mirror the market. Like, sorry, fundamental does not mirror news. Let me use news. News, breaking news does not mirror the economic strength. It can only cause market to react. After a while, the market will balance the economic strength. That's one thing you should know. That's why support and resistance work more. You can hardly see a trader that will never talk about support and resistance. Even in a normal stock market, they talk about it. It talks about it has to do with the range a particular instrument has been moving. So that range now pictured how people demand it and how people supply it. So it hardly go off that range, and investors will use it for their own investment, trading, and whatever. And unless if there's any breakout where the market can break and move to another direction. Do you understand? So have you guys learned something? Now, so these are the basics, the things that you need to do to understand this platform and how to identify opportunities. Like let me know if there's any question. You see, I'm not happy that I left that gold. I'm not happy. Gold has gotten to 1,001 something. You see, there are some things I'll just stay happy with. And that's why I don't like anybody to like influence my trade. I close my trade on gold. I don't like anyone to influence my trade, telling me what to do. Now, I could have been on mad profit now. Gold is now 1,000, 5,150. And I was targeting 5,200. And it's now almost 40 pips to 200. And it's a big volume. I could have made a lot of money. People who, so if you don't have a mind, don't come to trading. Keep your money in your bank account and let it rest. Because this way you can make money. And if you can't take risk, you can never make money. That's the truth. You have to get the money and take this and make money. That's what people don't want treasury bill. They come to stock market. I think they don't know about treasury bill, mutual fund, or savings account. They know they have money there, but they just want where they can double the money. So they look for opportunity and double that money and solve more problems. So let me know if you have a question, guys. Okay, so there's no question. So we're gonna end it here. I think you have gotten value on introduction, market overview, technical analysis, how to place trade, how to place a stop loss, the difference between margin and the free margin and the equity, and also support and resistance. So this is the major things you need to know as a beginner to be able to understand trading. Like, take note now, how to identify opportunity on chart is mostly through support and resistance. Another one is price action when the price is moving, but support and resistance can help you know the area you want to buy and the area that you most likely want to sell. So this is where we'll call it a day for now. If you have more question, you can be able to answer to throw it in before I end the meeting entirely. But I'm pausing the recording.